Welcome to the Deep Dive, the place where we cut through the noise on complex financial stories.
Straight to the point.
Exactly. Today we are diving into BigBear.ai Holdings. That's ticker BBAI.
Right.
And this company, it really captures this huge tension we're seeing everywhere in AI right now. You've got this established defense contractor,
Deep government roots.
Topman to make this big leap,
Yeah.
pivot its tech into the commercial world. Is it working? Is it real innovation? Or is it just hype covering up some shaky foundations?
And just to frame this, we're looking at BBAI as of September 27th, 2025. The share price for reference is $6.73.
Oh.
And that really grabs you is the stock's performance. I mean, it's been wildly volatile, but it's up over 360% year over year.
Wow, 360%.
Yeah, incredible momentum. It's pulled in a ton of interest, especially from retail investors.
And here's the hook, right? The reason we're doing this deep dive, despite that insane rally, despite all the AI buzz, our analysis, well, it points to a pretty major disconnect. The fundamentals, the actual business performance, suggest the stock is trading way above what we'd estimate its intrinsic value to be.
So the core question for you listening is, are you betting on a visionary AI future here, or are you potentially buying into hype that's masking some pretty serious underlying problems?
Is that 360% jump justified, or is it, temporary?
Precisely. A bubble waiting to pop, or the start of something big.
Okay, let's get into it. Let's unpack this. We'll start with part one. The business itself, the management situation, and the financial health, or maybe lack thereof. Chapter one, business understanding.
Okay, so BBAI. Their core pitch is delivering something they call decision intelligence.
Decision intelligence, okay.
Yeah, it's a mix. They do high-touch, bespoke professional services combined with their own proprietary software.
And historically, that's mostly been for?
Overwhelmingly government. Long-term deals with the Department of Defense, the intelligence community, DHS, the big players. They're really embedded in that secure government world.
Right, so their tech helps these agencies sort through massive data sets.
Yeah.
Turn noise into actual intelligence they can use.
Exactly. They even market their framework as observe, orient, dominate. It's pretty direct.
Okay.
Beyond that, they also have modeling tools, ProModel, Shipyard AI, used for creating digital twins. Think complex logistics, supply chains for big government programs.
But the recent buzz, that's mostly about this Panjim acquisition, right?
That's the big catalyst, yeah. That deal brought in their Vision AI capabilities. We're talking about Arcus for threat detection.
Like at airports or critical sites?
Exactly. And Veriscan, which is their biometric ID verification system, that's being rolled out for travel and trade security. So it moves them beyond just modeling into real-world security applications that generate revenue differently.
Which leads to their competitive advantage, their moat. It sounds pretty strong.
It is, and it's not just the tech. It's trust. It's security clearances. They operate where failure is just not an option. So the barriers for anyone new trying to get in are huge. Decades of trust, those hard-to-get clearances, specialized expertise. You don't just, walk into the Pentagon and land a major AI contract overnight.
Makes sense.
That being said, we need to be realistic about their size. If you compare BBAI to, say, Palantir.
The big competitor in this space.
Right. BBAI is much smaller, more of a niche player right now. They're going after similar pots of money, but from a very different starting point.
But the overall market, AI is exploding.
Oh, absolutely. The trend is massive.
Right.
Forecasts show the AI market going from around $300 billion this year, 2025, to potentially over $1.7 trillion by 2032.
Wow.
Huge growth potential. The question is, can BBAI actually capture a meaningful slice of that with this pivot?
Chapter 2. Management evaluation and strategic pivot.
Yeah, and this is where the story gets really interesting this year. It's been a bit of a revolving door in the C-suite.
Right, I saw that CEO change.
Yep. The previous CEO left, Mandy Long stepped in January 2025, and then, boom, the CFO was out by June.
That's fast turnover.
It screams major strategic shift. The board decided things needed to change fast.
And the new CEO, Kevin McAleenan, he's not just some random tech exec.
Not at all. This is the crucial part. McAleenan is the founder of Panjim, the company they just bought.
Okay.
And he's a former acting Secretary of Homeland Security.
So the acquisition and the CEO appointment are directly linked.
Absolutely. It reveals the board's strategy plain as day. They're making a massive bet on the jockey, as they say.
Betting on his connections, his network within DHS.
Precisely. The strategy is now laser-focused, Double down hard on the homeland security market using McLenan's contacts and Panjim's Vision AI tech.
Okay, but hold on. Is having a great network the main skill you need to turn around a tech company that's, well, losing a lot of money?
That's the gamble, isn't it?
It feels like prioritizing access over maybe operational expertise.
Yeah.
That sounds like a huge execution risk itself.
It's definitely a specific kind of bet. It shifts the risk profile, no doubt. Now, looking at how they're spending money, capital allocation.
Right.
The Pangiam deal was about $70 million, all stock, which is interesting. They're upping R&D spending. Around $11 million last year, which makes sense for growth.
Mm-hmm.
No dividend, no buybacks. Standard for a company trying to grow. But there's a huge warning sign flashing when you look at capital efficiency.
Okay, what's that?
We need to talk about return on invested capital, ROIC. Basically, how well are they using investors' money to actually make money?
And for BBAI?
It's deeply negative, like ranging from minus 23% to over minus 100%.
Minus 100%.
Yeah. Think about what that means. It's not just inefficient. A company with ROIC like that is actively destroying capital.
Oof.
Every dollar invested is basically vanishing, unless this pivot works perfectly. And like immediately, a company burning capital that fast, well, it's not a growth story. It's heading towards serious trouble. And the stock price seems completely disconnected from this fundamental reality right now.
Chapter 3, Financial Analysis.
And that lack of efficiency, that capital destruction, it shows up loud and clear in the revenue numbers.
Yeah, you mentioned declining revenue guidance. What's the history look like?
It's not great. Revenue was basically flat, stagnant from 2022 through 2024, stuck around $155 million to $158 million.
So no growth even before the recent dip.
Exactly. And then the latest numbers, Q2 of this year, 2025, revenue was $32.5 million. That's down 18% compared to the same quarter last year.
18% drop. That's significant.
It is. And management reacted by slashing the full year guidance down to $140 million. So they're openly projecting a decline in revenue for the year.
Which is completely the opposite of the AI boom narrative driving the stock.
Totally at odds. Then you look at profitability.
Let me guess. Not good.
Stark is the word. Gross margin in 2024 was okay, 28.5%. Acceptable for a hybrid service software model.
But below that line.
Disaster. Operating margin was negative 84.2%. Net margin was negative 187.3%.
Whoa. Negative 187%. They're losing almost $2 for every dollar of revenue.
Fundamentally, yeah. The core operations are just hemorrhaging money.
So cash flow must be negative too.
Persistently. They burned through $38.1 million in free cash flow in 2024. Just constantly bleeding cash, needing external funding to stay afloat.
Okay, so terrible revenue trend, horrific margins, burning cash. How does the balance sheet look healthy then? You mentioned low debt and high cash.
Ah, yes. The balance sheet paradox. It looks healthy on the surface. Low debt to equity, 0.39. Strong current ratio, 1.91. And a record cash balance, almost $391 million.
So where did that cash come from, if not from profits?
Exactly. That's the critical nuance. It didn't come from earnings. It came from financing activities.
Valuing stock.
Bingo! A huge $300 million stock offering, plus warrant exercises. They essentially bought that healthy-looking balance sheet by diluting existing shareholders.
Meaning each existing share now represents a smaller piece of the company.
Precisely. So that cash pile, that strength, it's artificial in a sense. It's temporary. It papers over the cracks of the underlying business that's still burning cash like crazy.
Okay, let's switch gears. Part 2. How is the market reacting to all this? This huge contradiction between the stock price action and these, frankly, awful fundamentals. Chapter 4. Market sentiment.
Well, the analyst community perfectly reflects the confusion. The official consensus rating is technically a buy.
Really? A buy?
Yeah, suggesting maybe long-term optimism on the pivot. But look closer, the uncertainty is massive. Price targets are all over the place from a low of $1.52.
Wow, that's way below the current price.
All the way up to $9. That huge range tells you analysts have basically zero agreement on what this company is actually worth.
Okay, that makes more sense. What about short sellers? People betting against it?
Very high short interest. 21.31% of the free float is sold short.
21%, that's huge.
It is. It shows deep skepticism from sophisticated investors who think this rally is overdone and the price is going down.
High short interest also means
Potential for a massive short squeeze.
right. If the price starts rising, those short sellers have to buy back shares to cover their positions, which pushes the price up even faster. That's a huge part of the volatility here.
So the shorts add fuel to the fire, potentially.
Definitely. But then you look at the technical chart, and it's completely ignoring the fundamentals right now.
It's just going up.
The momentum is strongly positive. The stock's trading well above its 50-day moving average, which is around $6.21, and way above the 200-day at $4.79.
So technically, it looks bullish.
Clear uptrend. Price action is king at the moment, completely detached from the operational reality we just discussed.
Chapter 5, Ownership Structure.
So who actually owns BBAI stock?
Good question. Is it smart money? Big institutions?
Institutional ownership is pretty modest, around 35–38%, and a lot of that is passive index funds, Vanguard, BlackRock.
So not necessarily high-conviction bets from active managers.
Seems that way. There's the lack of big, active institutional players taking major stakes.
What about insiders? Management, the board? This is really telling. Insider ownership is super low, just 2.5%.
Right.
And here's the kicker. Over the last 12 months, insiders have sold, wait for it, a net total of over 143 million shares.
Sold 143 million.
Net selling. That is an overwhelming amount of insider selling.
That sounds like a massive red flag. The people who know the company best are cashing out.
It's one of the strongest bearish signals you can get. It strongly suggests that management and the board lack confidence in the current valuation. They're taking money off the table while the price is high.
You could almost see that as the ultimate sign the price might be inflated. Chapter 6, Risk Assessment.
Okay, let's try and synthesize all this. SWOT analysis style.
Strengths, weaknesses, opportunities, threats.
Right, strength. They definitely have deep expertise in the defense sector. The Pangiam tech, that Vision AI, is a real asset, and those high barriers to entry we talked about.
Got it. Weaknesses.
Obvious ones. Chronic unprofitability, just hemorrhaging cash.
Yeah.
That declining revenue guidance is a big worry. And the recent management instability, the C-suite shuffle.
Okay. Threats.
Competition, especially from Palantir, is fierce. The very high risk of more shareholder dilution down the road to fund the cash burn.
Because that $390 million won't last forever if they keep losing money.
Exactly. And the biggest threat, arguably, is just the market price itself being so detached from the current financial reality. That gap has to close eventually, one way or another.
What about bigger picture macroeconomic risks?
Yeah, two key ones.
Yeah.
Inflation and interest rates.
How does inflation hit them?
Those government contracts are often firm fixed price, FFP.
Meaning the price is set, locked in.
Right. So if inflation drives up BBAI's costs, labor, parts, whatever, they can't just pass that increase on to Uncle Sam. It comes straight out of their already thin or negative margin.
Ouch. So inflation directly squeezes them.
Yep. And interest rates. If rates stay high, that puts pressure on the overall federal budget.
Government has to spend more paying interest on its debt.
Which could mean less money available for the kinds of defense and security programs BBAI relies on. Potential delays, budget cuts, that threatens their future revenue stream.
Chapter 7, Conclusion.
So at the end of the day, it boils down to this core conflict, this battleground narrative.
The bull case versus the bear case.
Exactly. The bull case is all about the future, the potential. It hinges entirely on this strategic pivot to Vision AI being successful.
Driven by the new connected CEO.
Right. Leveraging his network, backed by that big cash pile they raised through dilution, hoping to tap into the huge AI market growth.
Okay. And the bear case.
The bear case rests on the past and the present. A terrible history of massive losses, revenue that's actually declining right now, huge amounts of insider selling, and just the sheer execution risk involved in pulling off such a dramatic turnaround.
It sounds like a high wire act.
Very much so. And let's bring it back to valuation. Remember, the stock price today is $6.73. Our educational DCF model, and this model assumes they actually pull off a reasonably successful turnaround over the next few years, it's optimistic.
Okay.
Even that model only suggests an intrinsic value range between $3.50 and $5.50 per share.
So a big gap between the market price and even an optimistic fundamental value.
A very big gap. The bottom line is the current stock price is pricing in perfection. It assumes flawless execution of the pivot, no bumps in the road.
Which makes it highly speculative.
Extremely. You're not investing in the current reality. You're betting heavily on the promise of a turnaround that faces enormous challenges. High risk, potential for high reward if they nail it, but the odds seem stacked against flawless execution.
So what's the one key thing for listeners to watch going forward to see if this turnaround is actually working?
Great question. Here's your final thought. That $390 million cash runway, it's burning. It's finite. They must start destroying capital. So forget the hype. Forget the daily stock swings for a moment. Watch one crucial metric. Net cash from operations or free cash flow. Is it turning positive?
From negative to positive.
Consistently positive. If BBAI can start generating cash from its actual business operations, then the pivot is gaining traction. If that number stays stubbornly negative, then that cash pile is just going to dwindle, likely leading to more dilution down the line. That's the acid test.
Fascinating. A clear metric to track. Thanks for breaking that all down.
My pleasure. Lots to think about with BBAI.
Absolutely. And thank you for joining us for this deep dive.
Remember to like and subscribe to the Stock Analytics AI YouTube channel. Helps us out a lot.
Yeah, definitely. And for our members, you get priority deep dives on S&P 500 stocks. We're actually covering the entire S&P 500 over the next few months, so it's a great time to join. For $4.99 a month, members can also suggest tickers for future videos right in the comments.
And if you just want a one-off deep dive on a stock you're interested in, drop us a super thanks. We do check those.
We do.
And finally, the important bit. Please remember, this analysis was generated by an AI system. It's purely for educational purposes.
Yeah, this is not financial advice.
Definitely not. Please do your own research, dig into the filings yourself, or talk to a qualified financial advisor before making any investment decisions based on anything you hear here.
Couldn't agree more. Thanks again.
Thank you.